A very good evening to you all, friends. I welcome you to this eighth program of the Auditing and Assurance Standard Board of the Institute of Chartered Accountants of India for this council year. Uh, in about a month's time, this is the eighth program, and about 50 programs on bank audits for this month are already lined up. Today's topic is very, very important. The topic is auditors' responsibility relating to fraud and evaluation of misstatements identified during the audit. In fact, even in today's CII conference at Mumbai, where the President ICI was present and the NFRA chairman was present, there was a lot of discussion on the auditor's responsibility relating to fraud. There was a 2-day international conference of NFRA also, which was held in Delhi last week. Again, there also this matter has come up. Worldwide, there is a lot of debate on this topic, that whether an auditor is a watchdog or a bloodhound. The old principle in the Kingston cotton mill case still holds good. There are a lot of expectation gap. The expectation of the stakeholders are different, and the responsibilities cast on the auditors are different. Probably the stakeholder expect that the auditor will carry out a forensic audit, whereas the auditing standards do not require the same. Maybe it's a time to have a relook partially at the auditing standards, but at the same time, in an audit, one cannot do a forensic audit. However, to what extent an auditor is responsible for the detection of the frauds and the misstatements, that is a matter of discussion during today's webinar. And to deal with this topic, we have two very esteemed and very young speakers, CA Gaurav Bhatia and CA Nitin Gupta, who have the relevant experience, who have discharged the functions as an auditor. Thank you. First of all, I express my sincere thanks to both of them. And to moderate this session, we have very young and dynamic four moderators: CA Tanya Agarwal, CA Riya Guglani, CA Vinay Jain, and CA Varsha. So we have an exact diversity of 50-50 out of the 6 speaker and moderator. 3 are women and 3 are men. And there is youth, there is experience which is combined in this webinar. So I'm sure that we'll be able to throw light. Worldwide, these standards are changing, and so is the standards in India also. We'll soon be coming out with the SQM family of standards and the related changes in the relevant standards. So today's discussion will be very, very important, and I'm also looking forward to today's discussion. May I now invite Varsha to kindly start the session. Thank you.
Unmute कीजिए वर्षा. You are not audible, ma'am. Mute है.
Hello, am I audible?
Yes, sir.
Yeah. Thank you so much, sir. Good evening, everyone. First of all, I'm CA Varsha, and today I welcome Chairman Sir CA Sanjeev Singhal, Vice Chairman Sir CA Vishal Doshi, and our guest speakers CA Gaurav Bhatia and CA Nitin Gupta, and all of our participants in today's webinar, where we will be discussing auditors' responsibility relating to fraud and evaluation of misstatements identified during the audit. Both of these topics have great relevance in our conduct of audit. So shall we begin? Now I would like to invite CA Vinay Jain to conduct further. Thank you.
Thank you, Varsha. So I welcome you all. So first of all, a very heartful thank you to the Chairman Sir and the Vice Chairman Sir of AASB for giving us opportunity to have this exciting webinar on the topic auditor's responsibility relating to fraud and misstatement identified during the audit. So we have our first guest speaker, Mr. Gaurav Bhatia ji. We are very honored to have Gaurav, an esteemed executive partner at ASA Baker Tilly in Delhi, to join us today. Gaurav is an expert on corporate fraud investigations and forensic audit. With over 16 years of expertise, Gaurav has played a pivotal role in assisting both domestic and international corporations in developing robust risk assessment and mitigation strategies. His extensive qualification as a chartered accountant, coupled with certifications in forensic accounting and fraud prevention, make him a distinguished figure in the field. As a special invitee to the Board of Governors of Institute of Internal Auditors, Delhi, Gaurav has actively supported regulatory bodies in fraud investigation matters. He has been a member of various trade chambers and an active speaker at various forums on the topics of risk, fraud, and ESG. Join us in welcoming this globetrotter and fitness enthusiast, Mr. Gaurav Bhatia. Thank you. Now I invite CA Riya Goglani ji to proceed ahead with the webinar.
Thank you, Varsha. Thank you, Vinay. Good evening, everyone. Once again, welcome to the webinar on auditors' responsibilities relating to fraud and evaluation of misstatements identified during the audit. We are thrilled to have each one of you joining us today. I am particularly excited about today's session as we are having a distinguished guest who is an expert in the field of audit. So before we dive into the topic, I want to extend a special welcome to all the participants. Your presence here today makes this event even more enriching. Thanks to the Chairman Sir and Vice Chairman Sir AASB for giving us opportunity to moderate the session. So without further delay, let me introduce our esteemed second guest speaker, Mr. Nitin Gupta ji, who is having a wealth of experience in the world of audit. He is a chartered accountant with over 18 years of experience in financial statement audits and other assurance engagements. He is a partner with ASA and Associates LLP, New Delhi. His experience spans Indian and foreign corporate, including some large listed entities across various sectors, that is food processing, pharmaceuticals, industrial components, consumer products, etc. He is a frequent speaker at trade chambers and ICI study circles and webinars. He was a special invitee to the ICI Expert Advisory Committee for the year 2022 and 23. He is also US CPA and Bachelor in Commerce from Mumbai University. We are fortunate to have you, sir, for sharing your knowledges today. I request to all the participants throughout the presentation, feel free to ask the questions using the chat free feature. We all have a dedicated Q&A sessions at the end where our speakers will address all your queries. Without any further delay, I invite our speaker to take the virtual stage. Ladies and gentlemen, let's have a warm welcome to our today's guest speaker, Mr. Gaurav ji and Mr. Nitin ji. Mr. Gaurav ji, over to you for starting the session. Thank you.
Thank you so much, Ria, for such a good and warm welcome. And it's a pleasure actually to be here on a weekday or a midweek evening to be addressing and interacting with my corporate friends and my professional colleagues. I would like to first thanks Mr. Sanjeev Singhal ji for giving us this opportunity. And Sanjeev ji has been always a great mentor for us, and in this field particularly, and also Mr. Vishal Doshi ji for this opportunity, Anil ji for organizing such wonderful sessions and such smooth coordination, and to this young lot today, Ria, Vinay, Varsha, and others who are moderating this event. Thank you so much, and a very good evening to all the friends. So a very pertinent topic, and I think Mr. Sanjeev Singhal ji perfectly set the tone for the evening by sharing the insights. I mean, who other than him can actually tell us what's happening or what's the latest news with respect to the audit fraternity. So rightly said, in terms of, I know, of course, I've been following up the NAFRA session which happened last week, and of course, a lot of discussions happening now with NAFRA coming in with respect to that how the auditor's role in today's world is changing. But while I talk about auditor's role, and I would like to take it forward, I'd also tell you that how we have planned this, unlike the sessions wherein one speaker talks on one topic and the other speaker talks on the other topic. So today, me and Nitin, because fortunately, me and Nitin are also colleagues. We are partner in the same firm, ASA Baker Tilly, and Nitin has been a great friend to me for a long time in this career. And so just to give you a background that how this started. Basically, I was earlier working in the auditing side. I started my career hardcore in the auditing side. I'm still an auditor, always an auditor by heart, because once an auditor, always an auditor. It's very difficult to wear the advisory hat once you become an auditor. But yes, I have also ventured out in between to uh, probably look at the other side also, in terms of that how the regulatory bodies are working, how the enforcement bodies are working with respect to the or probably tightening the threads of the audit profession here. So from that aspect, I have also worked on a lot of fraud investigations on the corporates, wherein we call it a forensic accounting now. We don't use the word audit rightfully because audit is meant to be uh, for the auditors. We as forensic experts, we have got new standards, and rightfully, we are not supposed to use the word audit with the forensic now. So it's no more forensic audits. That's the first thing which I just wanted to share, because a lot of time I have heard people using the word audits with the forensic also. So that's something which we avoid as per our standards. So coming back to today's topic, it's actually a very interesting topic which has been picked up by the AASB with respect to. So what they have done is that we are talking about two very important standards, right, of auditing, which is auditors' responsibilities relating to fraud, and also with respect to the evaluation of misstatements identified during the audit. So this is SA 240 and SA 450. So I'll be first of all giving a glimpse with respect to what fraud is. Because see, I come from the school of thought that before we even read a technical literature, we should understand the intent and the essence, right? That why this literature has been drafted, right? We should understand the basics. So once our basics are clear with that respect, then what uh, or probably what guidance we have received from our institute, right? That we are going to follow. So that will definitely be there. Nitin will speak a lot about it in today's session on the respective standards and also the practical insights which we are going to share. So without wasting more time, I would just now start the presentation. I hope the presentation is visible. Vinay, Ria, can anyone just give me a heads up? I hope anyone can give me a heads up if.
Yes, sir. Yes, sir. Yes, sir. Yes, sir.
Great. Thank you, Anilji. Okay, so I think Sanjeev ji very rightly said that our profession is going through very different times now, right? And a lot of what do you say? Before we talk about learning, I think we have to first address this big issue that we will have to first, maybe we have to unlearn few things what we have learned earlier, and maybe we have to then relearn some new aspects which are very much important. And while we do so, of course, we would need more help and support, and for which I definitely appreciate the work being done by our institute and different boards, and especially Sanjeev ji, wherein we are uh, pushing. And I think if you ask me, I was there working on the BRSR side also, the ESG aspects. And I personally feel that what we in India are doing, we are much ahead in terms of a lot of other matters, which was never the case maybe a decade back, right? We were the ones who were actually adopting the SOX as is when we used to call it ICFR, right? Internal Financial Control. But gone are those times. I think our current board, SRSB, and maybe our AASB, all the developments are quite, I would say, within the time, and we are very proactive in that particular aspect. So yes, when we talk about the frauds in the financial statements, I think this question, this is a nightmare. This word fraud, so-called, is a nightmare for any auditor when you hear it. Because generally, we auditors were always used to doing the conventional auditing. I would not use the word tick in the box because, of course, we have grown from tick in the box long back to moving to a risk-based audit, right, and control-centric, wherein people have understand that risk assessment is one of the most identification and assessment is one of the most important aspects. And it is not only the internal audits which are supposed to be risk-based audits. Even a statutory audit from that perspective today, it's completely risk-based. I mean, if you are doing, maybe if you are checking a lot of vouchers today, or maybe if you're ticking the box or just filling up the checklist, I don't know how you're going to safeguard yourself, because you need to understand that regulators like SEBI, NAFRA, RBI, they are coming after you. And it's not that their intent is to come after, it's just that the idea is that we have to scale up, we have to step up. And I think it's very correct. It's pretty much required in today's time. And it's a need of an hour, if you ask me, because the way the number of incidents have increased in the recent past of the frauds. I mean, earlier what used to happen was people used to know about maybe one Satyam or maybe one Enron which happened, or Reebok happened, Xerox happened. And it was all over the place. Today, even you don't see a lot of, there might be a small article, right? A very small article on the left-hand corner, or maybe somewhere in your Economic Times or Mint or Business Standards, wherein they will say that something has happened. For example, Byju's, right? I don't know. It's nothing has been established yet, right? But yes, regulators are after them, and a lot of movement is happening currently. So that's what the idea is now, that we will have to constantly upgrade ourselves, because what used to look like a big thing to everyone has become very routine. And now we need to actually ensure that we as professionals, we as auditors, are ring fenced properly in terms of what we are doing or what procedures we are performing. Right? That's the need of an hour. So this is a small clip which I found in a newspaper when I was working on this presentation, that in the coming time, the fraud cases are going to go up, right? This is bound to happen. Maybe there are various reasons behind it. COVID, I would say, not a recent one, but yes, that was one, because what happened after COVID was a lot of companies started changing their policies. And once you start changing your policies, your processes, a lot of times there are some gaps. So in the event when you start something new, you forget to close something, or probably you leave a small gap open there. So that kind of risk assessments or risk identifications, or maybe I would say gap assessments, have not been performed by a lot of corporates today. And that's the reason that why this thing is happening. Classic example, NBFCs. We were working on one of the investigations for an NBFC, wherein there was an RBI mandate, right? That what you have to do is that, if suppose so they had a wallet and they were putting a money in that. So investors used to put a money in that wallet, right? And then you get some return on the same, and it was very high, right? And they used to provide that for funding purposes. So suppose I can also invest and I can also borrow. Both the rates are defined in that wallet. So now what happened? RBI came out with this provision that if you know that I put a money in the wallet and it doesn't get credited or it doesn't get debited on my account, so now there is a process that after few days, it automatically you get it back, right? So that mandate came in, and RBI said that the companies have to start reconciling this aspect. Before they could say that, there were fraudsters who were ready, and they attacked a couple of such wallets who were not ready, because they were in the startup ecosystem that time. And at that time, I think business takes the front seat, and the corporate governance and the other aspects are quite back in your mind, right? Though investors keep pressurizing you, but as soon as you're not moving towards maybe a further round of fundings, or maybe you're not becoming a unicorn, or you're not going for an IPO, till that time you think that it's okay, we can handle our affairs. So exactly this happened there, that the fraudsters, they found the loophole, and what they did was they did a kind of a group attack on that particular entity. It was there in the newspapers and everywhere. Of course, out of the confidentiality, I can't share the details and all. But what happened was that so this company, they had to return the money back. So what happened, that people, around 400 or 500 odd people, they put in a lakh of money, each one of them, and company had to return it because it was stuck in their wallet. And then there is another institution wherein you can ask for this. This is called a chargeback. So chargeback request was made. So what happened was that they tried and tested on the system, and they found this loophole, that since the company is not doing their reconciliation regularly with the bank, so we can ask company also, and we will get the money from the regulator side also. So, and they get, for 1 lakh, they get 2 lakh. And this was a lot of people. So what I'm trying to convey here is that because of this new way of working, right? the fintech culture, the edtech culture, the tech word which is coming. I think even AI, now we are moving far ahead of it. We are moving to generative AI, right? A lot of other things are happening. Bots are working for you. They are doing the accounting. So you also need to look at the the term, what we very famously in our risk universe, we call it as what could go wrong. And I think that's where the role of the auditors come today. Even the statutory auditors, from that perspective, whenever we are going for an audit, we need to ensure that what could go wrong exactly. We have to have that kind of a mindset, right? We need to always keep thinking, right? We have used this term, we have been born and brought up in this fraternity listening to this term called professional skepticism. So that's exactly what the issue is. What could go wrong? You're not always supposed to think that, okay, everything is going right, I have to find something, or maybe I have to document it accordingly. You also have to think from that aspect, that what could go wrong. So this is exactly what these regulators today, NAFRA specifically, they are pushing us as auditors to rethink on the way we have been auditing. Not that our procedures are not robust enough, not that our guidelines are not stringent enough, but at the same time, since the risk universe is changing, right? Maybe 20 years back, there wasn't a AI related risk which anyone would have been facing. But today there are various aspects. Today only I received a WhatsApp stating that I'm from so and so bank, right? But since I'm into this field, I could figure out that this was completely, it was an AI generated message. So they have reached to your WhatsApp also, right? So which used to be a very secure platform. So, and then there is just one link, or not even a link. You just touch a message and suddenly you never know when an OTP comes to you and how the things get hacked. So from that aspect, it becomes very important. And we, since we do forensic audits also, I do, I mean, my team is into forensic. So forensic accounting and investigations, which we do. So therein, a lot of time we have seen that statutory auditors also now start facing a need for people like forensic experts in performing their obligations, which I personally feel is a very different kind of a ball game, or a very different mindset altogether. Recently, in one of the engagements, I got to know that forensic experts were hired; their reports were relied upon, which was never a case in the past. So, I think from that aspect, what I would say is that this it becomes very relevant. What exactly fraud is? How, as an auditor, I am supposed to either identify and or report on that particular fraud. Am I supposed to report only something which I have found myself? Am I also supposed to report something which I have got to know during the course of my audit from the management? Because these are two different scenarios. That management told me, okay, in good faith, I'm telling you that this happened in our system. Or probably they didn't tell me, I or my team has figured out by performing our audit procedures. So I think both needs different kind of addressals in this particular aspect. So exactly this is what we are going to discuss today. So I'll start with what is fraud. Now, when we talk about this word fraud, there are various definitions. There is an IPC, Indian Penal Code, which defines this, but we as auditors, we primarily rely on our standard of auditing, and then 447, which we call as a watershed section for the since it's a Companies Act, and mostly in the court of law when we are representing on any of the litigation matter under forensic. So fraud is taken up from 447 because court doesn't go with SA 240, right? But why I have kept these two sections here, or two different regulations here, to give you an aspect that they are not different from each other, right? Even what your SA is saying is pretty much what your section 447 of the Companies Act also talks about. So fraud is an intentional act by one or more individuals, which are among the management or those charged with governance, employees, or any third party, involving the use of deception to obtain an unjust or illegal advantage. So there has to be three things in this particular aspect, three factors for anything to be regarded as a fraud. One is it has to be an intentional act. The biggest challenge which anyone will face is how to prove the intention. But my question here is, why as an auditor I'm supposed to do that? I'm not supposed to conclude or go under litigation. That's not my job, right? I just have to flag off in case there is a fraud or in case there is a suspicion. That is something which I have to highlight. So the intention, proving an intention might not be possible for a statutory auditor, right? But what they can look into is various aspects which we are going to cover in this today's discussion. That what are the fraud indicators, right? Once you know the indicator, you can also start understanding or running your mind that, okay, this is an area where something could go wrong. And that's how I am going to cover it through my audit procedures. Then the next point was use of deception. See, please understand that why it becomes difficult for an auditor to find probably the fraud risk, or I would say the material misstatement in the financial statements arising due to a fraud, is because there is a deception involved. Anything, so see, it cannot be a very easily or something very simple scheme which can be developed, right? So generally the fraudster, they always use deception, right? So they use techniques which a normal auditor might not be acquainted with, right? They use that kind of an approach. For example, your phishing or spoofing attacks which happen. So, and the third point is to obtain an unjust or illegal advantage. There has to be some advantage which should have passed on. Just an attempt to do a fraud and a fraud which has actually occurred, there are two different things. So as an auditor, we have to look at an event of fraud here, right? Then section 447 is exactly, it also talks about any act, omission. It further broadens the scope of fraud, right? It does not restrict only from the auditing perspective, but also from an overall perspective, that it has to be any act, omission, concealment of any fact, right? Where the person is involved, he's having the connivance in this matter. Then there is also an intent to deceive to gain an undue advantage. Is again involved here. Whether or not there is a wrongful gain or wrongful loss. Now, Companies Act says that whether there is a loss or not, but if there is an act of omission which has happened, scheme has been formulated, that will come under the definition of a fraud. Even if you have not lost anything, right, but there is an attempt, that is getting covered under the Companies Act. So that becomes a kind of a distinguishing factor between these two different regulations which have been set. Now we know that what the fraud is. Let's talk about the fraud triangle. And I think most of you here today, my professional friends, you would have heard of this term, right? If you would have worked on any kind of maybe a forensic or a special purpose assignment, that fraud triangle primarily is an approach which is used to probably prevent and detect a fraud, right? Whenever you go for any kind of these kind of reviews, wherein you see that, and that's why I'm talking it here. Probably people don't talk about fraud triangle in the auditors line, right? In the statutory auditors arena, I should call it. But we should actually think about it, because unless until you know that how to uncover this, or probably how the fraud occurs, how are you going to actually plan your procedures around it? See, the procedures are very clear. They say you identify and assess the risk of material misstatement due to fraud. Very open-ended, right? Very vague. You have to obtain sufficient and appropriate audit evidence, right, with respect to it. And then you have to further respond according to that. These are something which are kind of, it's a rule book, right? But within the rules or on overall guidance you have got, how are you going to do it? So that how is defined here, that you should understand what is a fraud triangle. So there are three aspects of a fraud triangle. So it is called an OPR technique, right? Opportunity, pressure, and rationalization. So first I talk about maybe a pressure. That's how any fraud starts, or an incentive. So from the financial statement fraud perspective, what do you think will be a pressure, right? Maybe a financial instability in the company or increasing business failures. Your revenue is on a decline, right? Your inventories are getting built up. You are unable to achieve your sales target. That's a kind of a pressure which you start getting. What can be an incentive? Incentive is that probably company's top line is linked with my top line, that what I'm taking home. Your company sales are linked with my salary or the variable component of my salary, which happens in, I mean, most of the organizations, the sales teams operate in this manner. There is nothing wrong in that, but we have to understand that particular thing, that these are the indications. When you are going to define that what a fraud risk is, please first understand there has to be a pressure, right? Or an incentive. Then there has to be an opportunity. And by the way, these three things together will only lead to a fraud situation, right? Anything in singularity will not lead to a fraudulent situation, but all three together. And that's how you have to take it as a triangle completely and apply all these three techniques together. So first you look at what is the incentive or pressure while you are doing a process walkthroughs or understanding, or the first step which says that understand the company's environment, right? Or the industry in which they are operating. What kind of pressures generally come in that particular industry? If it is very inventory intensive, or it is human intensive, there might be a case wherein you see that there might be a high HR cost, or more people are engaged. Ghost employees can be one of the aspects to increase the cost so that your profitability doesn't look good. Sometimes that also happens, right? From the tax saving perspective, there might be that kind of a risk. Then the next part is opportunity. Opportunity is one area, I think, which as an auditor, we are very strong with identifying, right? And that's what you have to identify. Pressure or incentives is a broad level term. If you have an industry understanding or understanding of their business while you are communicating with the stakeholders, you are able to figure it out. But opportunity, you are going to figure out once you know the internal control environment. So once you perform your TOC, your test of controls, right, on the company, or probably you look at their internal controls over financial reporting, ICOFA, right? You look at those risk and control metrics and you apply the COSO framework, right, which is there with respect to the control environment. And there are a lot of things, your different aspects which have been defined in your COSO cube, the 5 key elements. So if you see that, you figure it out that where can there be an opportunity. So opportunity means weak internal controls, right? That can be one of the aspects. Lack of oversight from those charged with governance. The board oversight is very weak. The board doesn't question with respect to such matters. Or maybe there are weak segregation of duties or excess controls. Biggest risk. Authorization metrics are not clear, right? I mean, multiple people are approving multiple things. Same person is doing the same job which he should not be doing. He's receiving the bills also, he's clearing the payments also. He's also involved in getting the vendors. Maybe in small organizations you have challenges. And I think a lot of people will have that question in their mind that once we are auditing a small or an SME or a very small organization, how can we look at these aspects? Because even those organizations, you will have to report a fraud. By the way, we will talk about the auditors reporting on the fraud, which is covered under section 143, 143, 12 of the Companies Act, for which the rules are also defined. So we'll talk about it in the forthcoming slide. So that's an opportunity part. So you know what is the pressure, you know if there is an opportunity or a window has been kept open. Then you have to look at the third aspect, that's a rationalization. Now that's the biggest trait of any fraud, that it is always rationalized, that why it happened. So perceived justification for a fraudulent action is what rationalization is. Like practice by the management to commit very aggressive targets or very unrealistic forecasts, right? So they said that, okay, we were always used to give unrealistic forecast because we know that if we are going to give 100 target, then only people will do 80, right? They might say this, or they might pretend to say this, but once you look at the trend, you have to see that this might be done actually to inflate the numbers as well, right? Because this has a direct impact on your business forecast, your estimates which are made, even your valuations which are being done on various aspects of your assets. So that's exactly, this is what a fraud triangle is. And as a statutory auditor, I convey this message to all my friends here that please have this understanding of the fraud triangle, because this is going to really help you in this today's world, wherein I think we have to relearn every other day. Every second day there is something new which is coming up, right? So many new regulations are coming, so much is happening today that we should know actually what are the basics, and this is what the basic is. when you're talking about a fraud assessment. Now, when we're talking about the warning signs, what are the more warning signs which people are, and that's what my area of expertise is, guys. That's why I'm talking about it today. I mean, of course, standard of auditing and all, I will definitely come to that. That's one of our important area. But I first wanted to make some or provide some food for thought to all of you, that when people ask that, sir, how can I identify a fraud? How can I become a guy? And people start having this notion that everyone has to be a forensic accountant to find a fraud. No, that's not the case. You have to understand that what fraud is, first of all, how it can be identified, right? Or how a scenario can be created. So for that, I'll also recommend you to read this very important literature, which is available online. You can find it, which is called Think Like a Fraudster to Catch a Fraudster, right? So you have to start developing that thought process. And that's what in risk advisory part, we say, we call it by the name of, what do you say, the what could go wrong, right? What could go wrong assessment. So that's exactly what people should do. Now, unusual behavior of the people, right? That's one aspect, which is a warning sign. Financial discrepancies with respect to excessive variations which you find. I don't know how many times we are still making those ratio analysis, right? We used to do it like always while starting an audit. The first thing was to see that how the sales are moving at an overall level also and at an assertions level also. So that is something which used to give us a kind of an indication. Rather than doing a complete audit, why don't we pick up our sample from these exceptions only? That kind of an exception reporting is important. Maybe a lifestyle change, disregard for policies, or a lot of policies change in an organization, right? Even a CXO changes. You see how the stock market operates, what are the sentiments, right? Any CXO which resigns, or maybe two CXOs, CFO or a CEO resigns in a year, and you see the stock tumbling down. Why? Because that thing, the emotions are attached with that particular sentiments of the stock market. They move from that aspect. Okay, I think there is something which is not right. There is an indication of a fraud. That's why a lot of people are moving out. So from that aspect also, this is an indication which as an auditor you can assess. The consequences of fraud for an organization, maybe this we can skip, but yes, it definitely impacts from the legal perspective. We have seen those organizations which have where the frauds have been reported. They have seen some miserable time, their auditors also, and the management people also. Since we work with regulatory bodies like and the enforcement bodies like SFIOs and all in India, so we see that the situation is not that good, right? The regulators also summon the auditors, right? That probably if maybe 5 years down the line or 6 years down the line, there is any fraud which is reported, they will summon a statutory auditor and they will ask them to please come and represent why or what you did, why you did not cover up this fraud. So I would say that you don't need to worry about it. You need to first understand that what are your responsibilities. Keep your work papers, your planning documents, your your audit procedure file, and your entire chain of documents very strong with you. We saw that in one of the cases where we were working with an enforcement body on a high profile investigation. What happened was the auditors came and they said, sorry sir, there was a fire and all the papers got burned there. In the best excuse, right, to say that. I think that's not how we as professionals can actually we're not portraying a very good picture of how strong we are in terms of ethics values. That is where I strongly urge people that have a very strong documentation process, because that is the only thing which is going to save you in future. I have seen in my experience working with those regulatory bodies, it's not that they are becoming bloodhounders. They are just looking at that how we as auditors are stringent in terms of focusing, or maybe how well are we aligned with our standards which we have got. And that's where exactly the problem comes, that we forget our standards and we maybe in the interest of commercials, we move in a very different tangent altogether. Yes, as a statutory auditor, it's going to be very tough business in future. The times are not so easy, but at the same time, there is a big opportunity also. Wherever there is a risk, there lies a big opportunity. that's what we in risk advisory, we tell to our clients as well, that we don't do only a risk assessment, we do an opportunity analysis also. Similarly, an auditor should also look at that wherever you feel that there is going to be more questioning, more maybe rigorous approach from the regulators or NAFRA. There's a big opportunity which also lies here. And that's basically taking a stand or maybe representing your fraternity and coming back and probably giving a lot of recommendations. Something we should do. Of course, I'm going a little out of the track here, but yes, that's a message which I'll just share with you. Coming back to on the topic that what are the types of financial frauds, and that's where we start now talking a bit about the SA 240, right? Which is one of the standards which we have to cover today. So there are two aspects of any financial fraud. One is either it's a fraudulent financial reporting or there is a misappropriation of assets, right? So it has to be either in these two brackets. Otherwise, it will move to a what do you call it as a operational fraud, right? It will not be a financial fraud anymore. So from the fraudulent financial reporting perspective, there are different aspects like fictitious revenue and sales. This is, I think, one. Revenue is always considered as a fraud risk, right? Why? Because it directly impacts your financials. It directly impacts your cutoffs. Maybe an organization wherein they are booking more revenue this year and then reversing it in the next year. That's something which is definitely leading to a fraudulent financial reporting. Improper or inadequate disclosures. A lot of time there are events which happened, like maybe a GST demand being raised or some matter which has been taken up to authorities or has been under litigation. These are not properly disclosed. So that is something which is tantamounting to fraudulent financial reporting. So financial reporting is not only restricted to your P&L and your balance sheet and your cash flows or your notes to accounts. It also goes right to your disclosures, right? What you are making, your accounting policies and your disclosures. Then concealment of your liabilities or obligations or overstating of your expenses. All these are considered as fraudulent financial reporting, right? So if any of these are there, then definitely it is covered under SA 240 under the head of fraudulent financial reporting. And that's where auditor's responsibility comes, right? That they will have to. Okay, so before I take a step forward, I'll have to ask this question. I don't know. I know, of course, you guys can't answer it here. But yes, is it an auditor's responsibility, first of all, to prevent and detect a fraud in an organization? The answer is no. It is not auditor's responsibility, right? It is the responsibility of the management. It is the responsibility of those charged with governance to actually implement internal controls and those practices which will actually prevent and detect the organization from any kind of a fraud on their financial reporting. So from that aspect, it is not an auditor's responsibility. But yes, there is an auditor's responsibility with respect to ensuring that they have performed their procedures in a proper manner and ensured that to them there is no or during their course of performing those assessments, identification procedures, or evidence collection, they have not come across any such matter which will be called as a fraud or a suspected fraud. Similarly, misappropriations, which also again comes under the ambit of SA 240, misappropriation of assets, and the universe is huge of misappropriations. Anything related to your assets or your expense line item, right? Expense, ultimately, it means taking out the money, embezzling your receipts, stealing your physical assets for personal use, maybe, roll frauds, fraudulent expense, reimbursements, which can be reported. All these come under misappropriation. All this together makes the financial fraud universe for any organization. Okay, so now we talk about the fraud risk indicators. So, and this is going to be the most important part of my presentation or my part today, that which is basically again coming from SA 240. There is an appendix 1 which talks about the key fraud risk indicators. So I think our standard of auditing are such beautifully drafted. I was reading the international standards also and the Indian standards also. And trust me, we have covered a lot, right? They are very descriptive. They have a rule book. There are guidance available also for the auditors. It's just that we will have to probably go through it, right? And that's what the idea is. So a standard says that following are the parameters or the indicators which are there, right? Which an auditor can actually assess when they are looking at or probably responding to this fraud in the financial statement matter. First is unusual financial statement and performance indicators, like kind of an audit adjustments, a lot of audit adjustments happening. Persistent cash flow problems despite of profits. So many organizations, good, very good bottom lines, all green, but still moving on the borrowing model, right? They need funding. They need funding. So where the money is going? That's the question. So probably that asset never exists, where we feel that, or probably our liabilities are much higher than what we are assessing here. Then profits when the industry is suffering losses. Very unusual, right? This is also called in our forensic language as too good to be true, right? So when the entire industry is going down, there is one company which is making a profit. There might be a case that they are more innovative than others, but still, that is a kind of a red flag. Unreconciled subsidiary and account balances of the parent company and the general ledger. That is, of course, an old school thought. The unreconciled entries, the miscellaneous entries, the suspense accounts. But I think the fraudsters have become very smart. We don't find any miscellaneous or suspense accounts. I remember 12 years down the line when I used to do the audits, that time I used to find so many miscellaneous accounts, suspense accounts, right? But now you don't find these kind of accounts easily, right? It is all rooted. So, and in fact, I was talking to one of the person, right? And I said that, okay, you are in a road construction business. So you must be having, so are you making some kind of any facilitation payments? So that, yes, we are, but you'll never be able to find it. I said, why? No, we route it such beautifully that you'll never be able to find it. So how? We manage, we change our inventory proportions accordingly, we change our bombs accordingly. So look at the level. I mean, changing the bomb altogether. You are not a technical expert. You don't know what goes in the road construction, right? How much of bitumen or maybe other elements which goes in the road construction are there. How will you get to know that aspect? So it's not that easy. That's exactly the point. And that's why a lot of time you will have to perform those kind of inquiries with the management. And not only with the management, you have to talk to the other stakeholders. You have to talk to the procurement teams, talk to the human resource team, talk to the admin departments, right? Right from a security personnel to everyone, an auditor needs to now communicate. They need to be very effective in communication. Our standard also emphasize on that matter. Then unusual financial condition, like ratios are all gone here, there, and here. Then you are significantly outpacing your competitors. You're growing very fast, right? Huge profits or losses. There are a lot of financial pressure. The targets are very bizarre. Unusual close association with the vendors or customers. You see that a lot of your business is moving to one customer or maybe a related party transaction, right? A lot of cases we see. And I think related party is one aspect. If you ask me, wherein I was reading one of the survey which was conducted, right? Wherein they say that most of the fraud incidents which happened, there are related party transactions are involved there. When we work with the regulatory bodies also, we say the funding which is done or maybe the routing is done, is always ultimately through a related party. That kind of a web gets generated. Then unexplained inventory differences, a lot of inventory differences which comes up. Your poorly written policies, right? A lot of civil and criminal regulatory liabilities on the company. So with the policy, I would like to further add on that that's one area which is very weak, right, in the company, and that's something which an auditor needs to question. It's not always a risk or probably an internal auditor who has to question on the policies. Even as a statutory auditor, we need to question that why your policies are not descriptive, right? How do you ensure that this is covered? Because what happens is that you keep, if your policies are not very clear, you keep the room for yourself for rationalization. That tomorrow I will rationalize that, okay, I follow this, but this is an exception. That's also we follow. Because if you write everything and you say I've written everything in my SOP, then auditor will start pinpointing those SOPs only. So you don't write anything. Corporates, I'm just telling you that this is one of the indicators. Then the management override of controls. Our SA 240 very clearly mentions that what will be the steps which you have to take in case specifically there is an instance of management override of controls, right? And again, coming back to another facts and figures, most of the frauds which happen, the senior management are involved, right? The proportion you see, the maximum numbers of fraud are from the senior management. I mean, I'm talking about the value, not the overall quantum, because employee frauds or occupational frauds are much higher than the financial statement frauds in totality. But uh, otherwise, if you see that the financial statements which are prepared on that level, only mostly the senior management is involved, right? And that's where the management override of controls comes into the picture. Then lack of transparency and information sharing, we all are victims as auditors, right? That a lot of things are not told to us, that why you need to ask, you are a statutory auditor. I think therein you will have to be a little more rigid and keep your foot down. Because tomorrow when NAFRA is going to call you, your corporate client is not there to support you or help you, right? So that is something which we have to understand now. And I think we have created, this profession has a lot of respect in the market, and that's what we need to keep creating in the coming times also. Then risk in relation to revenue, very specifically, right? Your very big variations between budgeted and actual revenues, wherein you see the budgets are something and your actuals have gone completely down or has completely surpassed. Your fictitious revenues or sales, right? Your cutoff procedures help there in terms of that. Also, performing some extra procedures. Recently, in one of the clients, we saw that in the statutory audit, we were their internal auditors. So the statutory auditors were each also looking at the at the portal. So there is a portal that you can check the truck numbers or the lorry numbers, and you can see that whether that is a registered number or not, to see whether that inventory is actually received or not. So very funny incident why a statutory auditor is performing this kind of a, but that's what an inquiry is. They have that probably that hinge or probably an indication. That's why they are doing it. And we have also seen that such kind of actions, which earlier maybe people used to say only an internal auditor is supposed to perform, even the statutory auditors are now performing at a very limited sample on an overall from the risk and control basis, but they do check those aspects also. Then risk in relation to expense and vendor onboarding. Of course, ghost vendors, as I said, is one of the ghost employees and ghost vendors it's a biggest risk, right? That is something which is definitely talked about, and how to figure it out. I mean, that's again, you have to inquire, you have to communicate, you have to perform your analysis, right? Because if something extra has been passed on, the only way to figure out is by questioning and questioning and questioning more. Then IT. I think IT is one area which is really a very high risk area now. When a lot of things have been automated, there are clients who say that we are using a blockchain technology. What is happening, we don't understand. So why don't you call your IT teams and perform our IT testing? A lot of auditors, they might not be IT savvy, but we definitely need to engage the experts, right? Whenever there is an environment which calls for an expert, maybe an engineer for the valuations part, or maybe an IT expert from the cybersecurity aspect or IT risk assessment, we should definitely do that. While we were doing the audit, we have learned about this technique of black box testing and white box testing. I think now the auditor are moving more towards the white box approach also. So just not looking around, but also looking at the transaction level, that what is happening. Okay, just a couple of more slides with me. Then I will invite my my friend Nitin to speak more. Now I will talk more from this aspect of what NAFRA came out recently. So when I said it's the management responsibility to have or set up those internal controls, right, to avoid or prevent any kind of a fraud in the financial reporting. So NAFRA came out with this very interesting circular few time back, and they said that it is auditors have to be very careful, right? And they say that only resigning from an audit where you have found a fraud is not going to cover you up. Your responsibility is even higher than that. Again, they have not called you out that it is auditor's responsibility to report only. So very clearly, they have talked about few aspects. Now I'm going to share that what are the auditor's responsibility with respect to the fraud, right? So there is a section, I said 143(12) of Companies Act 2013, which says that if an auditor of a company in the course of performance of his duties has reason to believe right? That an offense of fraud has been committed in the company by its officers or employees only, not the third parties, the auditor shall report this matter to the central government within the time and the limits which have all been described. And there are further rule, which is the rule 13 of the company's audit and auditors rule, which are there 2014, which talks about the limit, which is 1 crore in individuality. This has to first has to be gone to the board and audit committee and then to the central government by filing the form 884. And then there is a clause in CARO also, which requires you to make the statement, which is a further extension of section 143.12. Now, why I spoke about these aspects is primarily for you to understand that if there are two instances, one is that a management tells you, right, there is a fraud which has happened, which they have uncovered in good faith, they have informed you as an auditor. Are you supposed to report that or not? The second instance is where it's not the management who has informed you, but you as an auditor have figured out, or you have a significant reason to believe that there is a fraud or a suspicion. So that has to be reported. So from that aspect, I think NAFRA is trying to increase the overall, the reporting requirement for the auditors, that don't resign, but report, perform your work diligently, and together with it, report. So there are further aspects to it, that how to report. We'll now cover in SA 240, auditor's responsibility, right? I'll start a bit on it before I ask Nitin to take it up. So we as auditors, what are the basics? I think we have all learned right from our childhood audit days that audit is about reasonable assurance and it is not absolute assurance. In Hindi, if I say reasonable assurance means thodi theek thak is the word actually for the reasonable assurance. And absolute assurance means 100% assurance. So an auditor cannot provide an absolute assurance. That you have to keep in your mind. You can't uncover all frauds. Materiality still has to be looked into from that aspect. Objective of the audit is to opine on whether the financial statements are free from material misstatements due to error or fraud or not. That remains as the objective of the auditor. Approach has to be a risk-based audit approach. As I said, that it is not a conventional transaction checking approach. It has to be a risk-based approach. You have to understand the controls, internal control environment, right? Do the complete risk assessment, and then accordingly figure out that what could go wrong, and do the walkthroughs and substantive checks that whether there is any indication that what you thought would have gone wrong has occurred or not. Then the responsibility, who's responsible for this ultimate reporting and all. SA 240 deals with auditors' responsibilities relating to fraud in the audit of financial statements. Now, this is a standard which has not to be read in isolation. You need to read this with SA 315 and 330, right? And then of course 450 also has a role to play, right? Which talks about the SA 315 and 330 on the identifying and assessing the risk of material misstatements. Then 330 is our auditor's response. You will also see 240 also talks about it. That's exactly how 240 has been spread out. The entire standard has been drafted beautifully in these three different aspects. The first is identification and assessment of risk of material mistakes. Like how to identify and how to assess, right? That was to be a first aspect. Performing inquiries and whatnot. Obtain sufficient and appropriate audit of evidence. Once you felt that there is an indication, that you have to create those evidences, right? Sufficient and appropriate evidence. And then respond appropriately to identified or suspected fraud. That how do you respond that particular aspect? This is again 315 and 330 are also there, which talks about it. I think I have already covered this part, that see, we have to understand one thing, that there is a difference between an error and a fraud, right? Fraud is an intentional act and error is something which is an omission, right? And it is very difficult. It's a very thin line. If you ask me that how do you create that that thing, you need a lot of practice and you need a lot of expertise to prove the intent. And then the problem is that you are not the judiciary. So how will you prove the intent in this particular aspect? So therein, I think you will have to look at the indications. Again, as I mentioned, that an auditor has to communicate. While communicating, you will have to take those maybe a warning signs, right? Whether this is happening or not, right? Accordingly, you can place it in a bracket that whether you feel it is a fraud or not. And see, even if you say that, yes, we feel that it's a fraud, and you probably report it, and the management doesn't agree with it, right? Then there are various implications to it, because you are anyways, first, it's the management responsibility. It is not your responsibility. You are just telling them that you have done your work, and during the course of performing your work, you feel that this is the reason why I feel this is a loss. This is a fraud, or maybe a suspected fraud on the company, right? And then accordingly, you will have to take the discussion forward. There are more aspects to it. I think in the interest of time, I'll now invite Mr. Nitin Gupta. Please throw more light on SA 240 and the other aspects, and we take it forward then from here. Yes, Nitin.
Thank you very much, Gaurav. And thank you, AASB, for inviting me. Thank you, all the moderator, for having us introduce. And welcome to all the attendees. This happens when a risk professional or advisor initiate the discussion, and then comes the poor auditor. So I was waiting for my time. So you have.
Sorry, Nitin, I've taken a little bit of your time, but yes, please.
It's already 7 o'clock, and this is a time when generally people start move from their workplace, and so it remember me that there can be one potential risk in this given case. The risk is what Gaurav was saying. What could go wrong? So what could go wrong, I would say, will be the possibility of participants who have joined, but who will be log out before the session gets over. So who will start logging out henceforth. Okay, so this is an risk for me going forward. How this can be mitigated? This can be mitigated by both of us, again, continuing with the practical insight, sharing our experience, what we have seen, what we have faced over the years, rather than just going with the bookish literature. So, and to make the session more interactive. So this is how our endeavor will be, and how we can conclude this. At the end of the session, one can get the logbook, like how much were the participation at the beginning and how much will be at the end. So this is the way in which one can conclude this risk, whether this risk actually happened or not. So this is the exactly putting in a different way, but this is what we will now get through this as SA 240. So this Gaurav has already touch upon this, like whose responsibility is for the prevention and detection of fraud. So yes, this is the management's primary responsibility, and then those charged with governance to have a oversight role. And where this is covered in terms of when we talk from our auditors documentation with the management. So if you look at the engagement letter also, which is there as per SA 210, agreeing the terms of the engagement. So in that also, this is probably one of the very common inclusion of the clause in that engagement letter, where the management is acknowledging that yes, it's their primary responsibility for the prevention and detection of fraud. Move to the next slide, please. Yeah. So what is the auditor's responsibility? So the auditor's responsibility remain at a very, I would say, consistent across the auditing standards, that to obtain reasonable assurance that the financial statement are free from material misstatement due to fraud or error. So this is the preamble or the preface for any assurance engagement, and how this can be done through maintaining professional skepticism throughout the audit, which we'll cover in detail. Then one should keep in mind that the risk of non-detection of fraudulent misstatement is higher than the misstatement due to error. So the non-detection risk in case of fraudulent misstatement is higher. And that's how one need to perform more robust risk assessment procedure. Then also risk of non-detection of management fraud is greater than of the employee fraud. because of the position at which the management exercise their role and responsibility, they are more likely to carry out the fraudulent activity. Yeah, move on. So the standard, this word professional skepticism, this is covered across the auditing standards, not only in SA 240. And in my experience over the years, this is very individual driven. This is a more of a qualitative aspect in the audit team member one can find out. And trust me, no literature, no, if you attend more number of sessions, that doesn't make you more about this. It's more of your thought process, your logics when we carry out the audit. So to take an example, many a times when we do in a larger engagement, where say we allocate the work among the team, and each team member, they are carrying out their related captions for which they have been assigned. So it will be very important and relevant that at least once during a daytime, they sit across and discuss what all audit procedures they are doing, what are the findings, and let's invite the feedback from the other team member also. So that is something which should be done. Then one can think over what can be the different kind of indication which may give a rise to a possible fraud. So for example, many times there is an say capitalization in the last quarter of the year, whereas the asset or the manufacturing facility that is still not ready to use, and actually it will be in the month of say April subsequent to the year end, but management want to have the capitalization in that year only. So that there will be a contradictory evidence, like for example the commercial invoices for the sale transaction, that all happened in the subsequent to the year only. Even the procurement, everything is happening subsequent to the year end. So that may give rise to an contradictory evidence that in actually whether the capitalization, whether the asset was ready to use in the month of March, or it actually happened in the month of April only. So that's how this kind of thought process requires. And if the team throughout the audit perform this kind of audit procedure and logic, so they can survive this, and they can at the end very well conclude that they have done the sufficient and appropriate audit procedure in relation to the fraud. And second thing also in this, maybe if say many times what happens that audit and auditee relationship is over the years, and many times we take a advantage, or we believe that no, this client personnel is very honest, or they have good integrity. So there is no harm in considering that, but we should always give a regard that this is not always the case. So that's how this is can be performed. Next one. Now, typically, now let's start with SA 240 in terms of what will be the first step in terms of risk assessment procedure. This will start with the inquiry with the management on their assessment of fraud risk. So almost all the larger firms, they have their own fraud inquiry document, which they have developed over the years. And it starts from very it initiates with the basic thing as how the management is assessing the risk of material misstatement due to fraud, what is their process of identifying and then responding if any fraud is identified, what is the communication they do with those charged with governance in case they have identified the fraud, and what kind of communication it's there on the employees regarding their views of business practice and ethical value. So it can, the fraud inquiry document has been built up across the firm. But let me share the practical experience where this is not performed in a right way, which could be done otherwise. So many times this fraud inquiry document, this is being exchanged at the end of the audit, whereas it should be at the beginning of the audit, because once you get the response, then only you can identify and assess the risk of material misstatement, and then you can plan the audit procedure. But if it is being done towards the end, so then it has no benefit to that. Second, never restrict this inquiry only with the finance controller or CFO. They are only one of the team member who need to be inquired. Have a larger audience in place. Go and meet with the sales head, with the procurement head, with the compliance head, and then with the audit committee, board of directors. So meeting them many times gives a different kind of insight, which otherwise a finance people, they will never provide. And then practically how it works is that the audit team member, they share the questionnaire with the client, request the client to the different person to have the broad level of response as a draft, get the draft response, and then fix up the meeting with the team, with the client personnel. Always go at least as a 2 team member to do the fraud inquiry. Never go and sit down alone. Take the assistant or the team member along. Say if manager is going, then take the team member along with him, and then have a detailed discussion. And take this as an opportunity, not just filling the exercise like yes, no, not like that. Do the cross questioning and engage in the discussion rather than one side of communication. Once that is done, then take the sign off from them, and then so as an end result, you will come out and get to know that where all there can be a potential fraud risk factor. Example would be, if say a company, like during the year they got the lending funding from the investor, from the PE investment, and as a part of KPI they have a very aggressive target to meet. Now this gives rise to a fraud risk factor. In order to meet the target, there can be a material misstatement, maybe revenue recognition or understatement of expense, so that to have a high profitability. So all this kind of thought process will come through this inquiry, and this is very important part. And once this is done, then second aspect comes the have the internal team discussion, which we called as an engagement team discussion. Once this inquiry is done, and in that engagement team discussion, have the larger audience, take all the team members. Many a times the suggestions or thought process which comes from the article trainees, they are more relevant than from the managers or partners. So have the entire team sit across and engage the other team also, like say in a larger engagement where the audit team, they engage their tax team to do to help them in term of analyzing the tax assessment or tax computation. Similarly, say if there is an impairment valuation or any, so they may engage their valuation team to assist them. Similarly, if there is a GST litigation going on, so they can engage their own GST professional to help them out to conclude whether what is the probability of that litigation case. So if say audit team has involved this other service line team member, get them also involved in that discussion, so that it will have a larger audience and there will be more round of discussion. So to start with, inquiry with the management, then our internal team discussion. Yeah, move on, please.
I think Nitin, to add on what you said, I think very rightly you have put in this aspect, and I would just like to touch upon one more aspect in this, that mostly our teams, they I don't know why, but they feel restrictive that they only have to talk till the finance heads. That since we are the auditors, we are just supposed to talk to the CFOs or maybe the head of finance and all. But I think that's where they're restricting themselves, because fraud here is not only restricted to the finance team. It can be in any of the functions also. So a lot of time we have seen that when you talk to people from the different teams, right, and even especially the board and the audit committee from that aspect, A lot of time we feel that they don't want to talk us, they are not inviting. Why should we go as an auditor? Why should we increase our responsibility or maybe duty? But herein, I think that communication is very important. I mean, writing to them with respect to it, seeking their probably idea or the suggestions on this particular aspect is very important. Yes, you very rightly touched upon this aspect, Nitin.
Rightly, and again, more practical insight on this. Never make it a big agenda item to initiate the discussion. If says somebody write all the fancy emails as an audit team member that we want to have a fraud inquiry, so that word fraud
Yeah.
itself makes
Yeah.
the opposite person
Uncomfortable.
restrictive. Yeah.
Yeah.
So just don't make it a, though it is very essential and important auditing procedure, but
Yeah.
don't project in that way. Make it very simple. That yes, we want, it's a regular inquiry. We want, we do every year. So invite the person and fix up a time, because many times what happens that we client take it very casually, and even we too. Okay, okay, we will meet tomorrow. Then say if then evening hours, but have a prior calendar block. Okay, number one. Number two, always first send the this questionnaire and then ask them to have the draft response. Maybe they can send the response so that as an audit team we can look at the response and then sit down. But many times client, they don't want it exchange over the emails. They will say that yes, we have filled the response, now let's have a discussion. Okay, then do the discussion, and then it should not be restricted to just yes or no task. Have by the time, say if it's a recurring audit, we are aware about their business, their industry. So engage into cross questioning, make that discussion more interactive. This is all what I want to communicate right now to the attendees. Don't consider this as a task where this checklist is there, one need to fill and do the sign off. Now, having done the fraud inquiry and then having done the internal team meeting, then comes the additional procedure. And this everything we are talking from a risk assessment. Right now, we have not reached to a conclusion whether there is a material statement due to fraud or not. Still, we are at a planning stage only. Now, next would be as a part of planning, we do a planning analytical review, what we called as a PAR. So the objective of PAR is to have the very broad level like variance analysis and gather the explanation against those. Many times from that also we come to know that this can be a potential fraud risk factor. For example, there is a, say, new customer with whom there is a very significant sale happened in the year one, and their receivable balance is also significantly high, whereas other customers, they have a still good credit period and good recovery. So this kind of analysis can come even before starting the audit, the execution. So all those will be covered under this planning analytical review. Then there is always, under auditing standard, there are two factors where there is a presumption that there will be a fraud risk. One is on the revenue recognition. By the nature of revenue, it is rightly said that there is a presumption that fraud risk is there in the revenue. And second is the management override of controls, because management is in the position where they can override the set controls. So these are the two areas where bare minimum, if we look at our significant risk tracker, so this will be the two areas where the fraud risk will be there. There can be additional, okay, depending upon the entity, but this will be the minimum one. Now, standard requires that the risk of material misstatement of fraud need to be identified at a financial statement level, which is at a like macro level, and at the assertion level. Now, take an example for this. Company got the funding from the private equity player, too much pressure on meeting the targets. So that will give rise to a fraud risk at a financial statement level. vis-a-vis at the accession level, it can be, say, in the earlier years, company there was a significant amount of sale revenue which happened, but somehow all the receivables are still outstanding. And in the current year, the regular sales which are happening in the current year, they are being collected, but still those earlier year receivables are continuing over the years. So there is a risk, whether like in terms of the existence of those receivable and then the valuation aspect. So this can be the risk at accession level, valuation and existence of the receivables. Similarly, in terms of inventory also, many times inventory existence is the fraud risk factor, but not the valuation, because valuation would be more, it would be like given set of accounting principles which company would apply. So, but yes, in terms of existence, there can be a fictitious inventory lying in their warehouse. So, within the caption of financial statement caption of inventory, existence can be a fraud risk, but not the valuation. So this is what like I'm trying to explain, that it need to be identified at the accession level. So having done all this through the fraud inquiry, through our internal team discussion, and by all this procedure, the conclusion will be that we will have a list of significant risk which are like on account of fraud. So bare minimum, it will be revenue and management override of control, and there can be additional one as we are discussing. So once this is done, so our initial part in terms of risk assessment, like one can say that we have performed that. Now comes the response, how we address those risks. Yeah. Move on. Yeah. So now comes the auditor's response. So in terms of management override of control, the normal like audit procedure which any audit firm would do is, the most common one would be the testing of journal entries. Now this is very important one in any like auditing. The most important part would be how to get a comfort over the completeness of the journal entry data, the dump of journal entries which the client is providing to the audit team. In a typical ERP environment, this becomes more important. So there are various ways in which the audit team can get a comfort over the completeness. It's like what procedure they are performing over information provided by entity, which we commonly called as a IPE, testing of IPE. So if the entire journal dump comes out from the ERP, so maybe audit team, they can engage their own IT team to assist them, because they are the right person who can validate this. So they can sit down or they can look at what command the like client has given while generating that data. So that is one way. And second common way is to do the TB reconstruction. This is also very commonly term referred in the auditing. TB reconstruction means the dump which the company has provided, the entire dump of the entire year accounting. So one can do the TB reconstruction. That means, say, the opening balance of the entire TB will come from the previous year closed books of accounts. Then take the entire dump, segregate the debit balance and credit balance for each account head, arrive the closing figure, which should be there as per that dump, like opening, then all the debits minus credit. This will be the resultant number figure as per the dump. Then compare that number with the closing trial balance. Academically, we say both the numbers should match. The number which is there as per the closing trial balance and vis-a-vis what is derived number as per this entire dump. If that number is matching, then that means the dump which client has provided to the audit team to test the journal entry is complete. So this is how one need to do that TB reconstruction. It can be done some other way depending upon what audit procedure the audit firm is they are having. But what I'm trying to explain is that before stepping into testing of journal entries, it will be very important to to demonstrate that the dump which you have got is complete and accurate. Once you get the dump, then one need to determine the criteria, the attributes. So there are very like standard criteria which, say for example, uh, entries which have been passed on the weekends, public holiday, entries which are approved by the CFO or managing director, then entries with having some specific narrations like on account of, on instruction of, something like that, and entries which are compensating with other account, entries which are passed with a whole number, like say say for example 10 lakh rupees, 1 crore rupees. So there can be n number of criteria which can be established. Now, how to do that smart way of work rather than having all those outdated criteria which will not reach to any conclusion? So setting the right criteria is an important step in this testing of journal entries. This will come from our assessment of the client business and how they operate, how their financial closing process is there. So based on all those understanding, one can have the different criteria and then do the run that dump which you have got from the client for that criteria, and you will come out with the exception report which will match with those criteria. And then on those number of entries, do your substantive procedure, and then conclude whether is there, like in the journal entry, is there anything which you have found out which will give an indication of material misstatement. So this is how journal entry testing typically happens. Okay. Then another would be to do the auditing of estimates. So estimate by its nature is more prone to management biasness, and where there can be a more likelihood of fraudulent financial reporting. So again, there is a separate as to procedure on how to do the audit of estimates. So it's always important to challenge the estimates which are being used by the management, either by doing the re-performance or by performing specific procedure on those estimates or those assumptions which management is using, and then reach to the conclusion. Another one would be testing of all the related party transaction in terms of their arm length price and their business rationale. So in those way, one can perform the procedure related to management override of control. Then comes the another way, like say, although procedure in terms of revenue or in terms of inventory, I can take different examples. Most important would be to have the element of unpredictability. Many times, the audit team member over the years, they are so consistent in performing their audit procedure. Even the client is aware that in terms of cutoff testing, they will pick the last 5 transaction and first 5 transaction. The audit team will not go to the 6th or 7th transaction, because over the year, same audit client is there, and although the team member are changing from the audit team side, but their approach and their methodology remains same. So don't have those kind of standard audit procedure over the years. Have some unpredictability involved. For example, if say there are multiple location at which inventory is maintained, always have 1 or 2 location as a surprise element. It should not happen that the locations which are nearer to your office, you are more comfortable by picking that location. No, pick those location which, even if say those are not material location, but still pick 1 or 2 out of the say multiple locations. Another example would be when we circulate the balance confirmation to the selected parties of receivables and payables. So do some kind of unpredictability in the given year. For example, many times we pick only the high value parties, say anything which is more than 10%. So that is one way of doing, but then pick some random parties also. And rather than sending the only balance confirmation, the year-end balance, there is another way to do the circulation is, instead of getting the closing balance as confirmed, like one can mention the list of transaction, okay, where there is suspectability that those transaction can be fraudulent, or there can be something not seems to be not correct in those particular transaction. So put those transaction as a part of this confirmation letter and ask the receivable or payable to confirm whether those transaction are there as per their books of accounts or not, irrespective whether those has been collected or paid, because here the focus is on the revenue transaction, not on the closing balance. So again, just an example, it can go on depending upon the entity for which we are doing the audit. So the essence is, don't restrict with the traditional way of doing the audit, or just restricting to the very recurring audit procedure over the year. Bring something new, which will give a charm to the audit team also, the young professionals, the article trainees, to do something new in the given year. Move on. Now, once the audit procedures are performed to address the specific risk of fraud, then comes the evaluation towards the end. And to support that, as analytical procedure is performed at planning level, those are performed at final conclusion level also. And then the response what we get from the client, and then based on our team discussion also, we reach to a conclusion that, is there any risk of material misstatement due to fraud which was unrecognized by us at the planning level, because that kind of finding can come at a later stage during the conclusion part. So if that is the case, then again go back to your plan procedure, have the additional procedure respond to address that risk. So that can be situation where it is more like coming out from the final analytical review. And then if, say, auditor has concluded that yes, and there is an identification of misstatement, now whether that is due to fraud or due to error, that will be the next step. If it's due to error, and if client is like taking that adjustment, fine, get that adjustment done and move on. If the client, they have a different view that no, this misstatement, this is not a misstatement, what they have done is right, so then based on the materiality and your own assessment, park that as a unadjusted audit difference. This will be covered in the next section of this topic, but this is how the audit need to be concluded. And yes, if auditor confirms that financials are fraudulently misstated, and then evaluate the implication for the audit. The first one would be to have the modified audit report. Now, whether it will give rise to qualification or it will give rise to adverse opinion. So again, there is a separate thought process and guidelines behind this, because that different auditing standard will take care. But if we are restricting ourselves to SA 240, so here auditor need to conclude the implication on the audit in terms of reporting, and whether they have a reporting responsibility outside the audit report. That is what Gaurav has touched upon, that something reporting to the central government in terms of section 143(12), or then there are factual reporting in the CARO audit report also in terms of fraud. So this is how the auditor will conclude. And if everything goes well, auditor has not came across the fraud risk, like fraud misstatement throughout the audit procedure, so then his auditor is good to go, good to conclude, and just have a like sound documentation and conclude the audit. Now, many times, if that the likelihood, I mean the magnitude of that fraud is such, which will make the auditor to think upon whether to continue with the engagement or to have a exit from the engagement. So again, it's depend upon the case-to-case basis, and the standard talks about that if that is the situation, then auditor need to determine what is his professional and legal responsibility. So legal responsibility would be in term of, say, in the there is a literature from guidelines from the SEBI also for the auditors of a listed company, when they can resign in between, when not. So auditor need to address all those kind of legal responsibility, and then communicate to those charged with governance in term of, say, their intent to withdraw from the engagement if that is the case. And then if that happens, then do that. Next one. So once the audit procedures are performed, now towards the conclusion, taking the management representation through this MRL, what we called management representation letter. So there are various like matters which need to be represented by the management. So regarding the fraud assessment, management should acknowledge their responsibility for the design and implementation and maintenance of internal control to prevent and detect fraud. So this will come out in their representation, and further they will represent that they have disclosed the result of management assessment of risk of material misstatement, and if there is a like fraud occurred or suspected fraud, so they have disclosed all those situation, all those instances to the audit team member. So the management will acknowledge this as a part of their representation. But again, the going back to the basic, management representation is not an audit evidence. So this is not the like one can take a shelter of that. Yes, it was represented by the management also. So, but it would be equally important that what actual audit procedure audit team has performed in terms of assessing the risk, identifying the risk, and then what kind of response they have done, procedure they have done, and then the conclusion what they have reached. And this management representation will be the thing to support that at the end. But this can't be a replacement with the audit evidence. Many a times I have seen that management, they are not so keen, or they to have this kind of matters to be included in the representation. So again, that itself may give a reason for the audit team to think over that what is the reason of their reservation. Might be say the person who is signing the representation letter, he is just newly joined, so he or she would say that the audit year happened like he has joined subsequent to the year end, and so why he should. But then one need to understand that person is, although that person is signing the representation letter, but it is always on behalf of the management. It is not in his individual capacity. Yeah. Now, in terms of communication to those charged with governance, this is the situation where the fraud has been identified while carrying out the audit. So again, one need to respect the client confidentiality and the professional responsibility. So the first thing would be to communicate well in time to the management and then to those charged with governance wherever the auditor has coming across a instance of fraud. And again, this require experience and the way in which the communication to be happen. And nothing can be thought over the session. It will come like on an individual to individual basis. And then what all documentation one need to have to safely say that they have complied with this auditing standard is, number one, that fraud inquiry document which we were talking at the beginning, and then what kind of team discussion the team had, what all fraud risk factor the team has identified at a financial statement level and at a accession level. So typically a fraud response schedule or fraud risk, there is a like template which all the larger firms they have developed over the years. So in that, this need to be documented. And then what is the overall response to the risk which has been assessed as a fraud risk? Now, take an example in case of revenue, auditing the revenue. Okay, there will be quite number of procedures which otherwise one can do while doing the testing of controls in terms of this adequacy and operating effectiveness. Then comes the substantive testing in terms of test of detail, analytical procedure, all those. So there will be say n number of procedures within the revenue, but one need to segregate which all are the specific procedures they have done to address the fraud risk. So not all the procedures within revenue can be regarded as that these are the specific procedures to address the given fraud risk within revenue. So one need to have those tailor-made procedures, and then what conclusion being drawn, whether the team has obtained sufficient and appropriate audit evidence for that given audit procedure. So this is how this entire things will be documented. And then if there is a identification of fraud, so what communication has been done with the management, those charged with governance, and if it require a reporting to central government in terms of section 143(12), then the relevant documentation with regard to that. So this is how the documentation will speak up individually. And once everything is done like that, so the audit team is safe to conclude that yes, they have complied with this auditing standard. So this is how one need to approach this particular auditing standard. Now, there are some examples in terms of what can be the tailor-made audit procedures to address the fraud risk. So always have some unpredictability, some unannounced audit procedures. Like for example, get the cash counting if say a company is having a like transaction through cash in terms of their petty cash, or so get the cash count done at a surprise date. In terms of confirmation, we have spoke about the confirmation procedure. Change your sampling year on year. Never restrict, like say many firms they have a rebuttable procedure that any individual party having balance more than 10%, those need to be like get selected in that confirmation process. But then select other parties also, because then client is also aware that the team will select only parties who are having more than 10%, but then get the opportunity of getting other parties also selected. And then some related party transaction, even though you have the evidence available in terms of the documentation, but challenge the business rationale for those related party transaction. In terms of revenue cutoff testing, again, it's always depended in terms of many times we discuss among our team also, like till what date we need to go back to do the revenue cutoff testing. So I would say it's always important to understand what is the frequency or what is the time lag between the goods which are being dispatched from the client's premises and the time at which it is being reached at the customer premises. So depending upon which location their customers are and what is the mode of transport. So many times say it takes 4 to 5 days to reach the goods, and depending upon their terms in terms of when the risk and reward are transferred or when the performance obligation is met. So if say that terms are that the risk and reward will be transferred upon acceptance of goods by the customer. So that means till the time it has not reached to the customer premises, one should not record the revenue in terms of the cutoff testing. So So, and in the general time which it takes, say it's 5 to 6 days. So in that situation, one need to expand their testing, like sampling. So take all the sales which are recorded over the last 7 to 8 days to be on safer side. Don't restrict only to the last day. I mean the last 5 transactions. Take the dump of last 6 to 7 days of sales which are being recorded, and then do the sampling over those transactions. Come out with your number of samples based on your sampling technique, and then do the revenue cutoff testing rather than taking just last 5 or last 10. So this is how one can design their sampling criteria for any, like it can be revenue cutoff, it can be purchase cutoff in a similar way. And another example would be in terms of, say, inventory. Many times companies which are dealing in a perishable commodity, okay, like say grocery items or the crops in which, say, they are dealing into trading of crops material or grocery item. So, and those items are likely to be infected by the moisture and insects. So they do like pesticides and what we called as a fumigation. Okay, so but many times it has seen that only at the year end, okay, at the March year end, those material are being fumigated. So when those are fumigated, it means as a person we can't enter that premises and do the inventory observation. So many times the client will say that this much inventory are under fumigation. So you can get the third party certificate, like the agency who is doing the fumigation, they will provide the certificate that yes, they have this much of inventory which they have fumigated, say 2 days prior to the year end. So this is way in which they will confirm. But by the nature of those inventory, you as a person we can't enter that premises. So if this is the case, then again it itself has a fraud risk factor, right? Now how to mitigate that is to have a business understanding and the entity, like the environment in which they operate, whether this particular period, say of March month, whether this is the time where this kind of like those material are prone to be affected by the moisture or otherwise. So that's something our business understanding will come into play and say, if we happen to audit other client also in the same industry, so what is their practice, and then we can get some literature, some industry report, whether this is a common practice or not. So this is how one need to develop the audit mindset. It's not just taking the confirmation from that third party will you can say that yes, you have performed the robust audit procedure. Another case would be to get the specific terms of contract with third party confirmed. So many times in terms of exchanging the confirmation, balance confirmation, we can also attach the agreement that this is the agreement which is available with the audit team, and ask the opposite party to confirm whether the same agreement terms and condition is there as per their record or not. So here we are not restricting to the closing balance. Rather, we are looking at the entire like relevant terms and condition that will give a more comfort over the underlying transaction. Reviewing the inventory, scrap and wastage. Many times scrap, it's a area where it's a like potentially weak area, control related thing in terms of the scrap generation. The vendor to whom the company is selling the scrap. So what's the control over the selection and identification of that particular party to whom the scrap is being sold. So that is how one can do, and what is the normal wastage and abnormal wastage happening. So this and all these examples are there in this essay 240 only, the appendix 2 to the essay 240, that talks about what can be the specific audit procedure to address the fraud risk. we are discussing the key one, but again, one can go through that entire list and then you will understand. This is the extract of audit report in term of audit report, just again to keep our basics very clear. So we have highlighted the text. So this is as per SA 700, the standard audit report of the any audit, like annual audit. So in terms of management responsibility, it's mentioned over there that the responsibility also include maintenance of adequate accounting record in accordance with the provision of the Act for safeguarding of the asset of the company and for preventing and detecting fraud and other irregularity. And in terms of auditor's responsibility, our objective are to obtain reasonable assurance about whether the financial statement as a whole are free from material misstatement, whether due to fraud or error, and to issue an audit report that include our opinion. So again, to keep the things in a right perspective, just take an extract of the audit report. Yeah. CARO reporting. Now, these are the factual reporting which are there as per the CARO 2020 in terms of the fraud. Now, the scope has widened as compared to the earlier CARO. Again, it's a now we are accustomed with this CARO reporting, so we'll not spend much time on this. But just to make it clear, the requirement is whether any fraud by the company or any fraud on the company has been noticed or reported during the year. So this is what auditor need to report in terms of their CARO reporting. Yeah, moving on. So this is what we have covered in SA 240. Very well initiated by Gaurav in terms of understanding what is fraud, what are the fraud risk factor, and then I touch upon that typically the like audit procedure. Very important to identify and assess what are the fraud risk factor. Bare minimum, it will be revenue recognition and management override of control, but there can be many more. And then have the specific audit procedures executed to respond to those risks, and then have the conclusion at the end. So this is about the SA 240. Very briefly, we'll touch upon SA 450 in just, I would say, 2-3 minutes. Please pardon me for that. Evaluation of misstatement identified during the audit. Now, in a very simple term, what is misstatement? Misstatement is accounting which has been done, which is not in accordance with the financial reporting framework, or which are not supported with the underlying or documentation. Okay, so this is a very layman, like I'm just giving an example. What is a misstatement? So throughout the audit, when auditor is performing the audit, they will identify that this is the misstatement. For example, capitalization which company has done, but according to auditor, it doesn't meet the criteria for capitalization. It's in the nature of repair and maintenance. So expense which is like transaction which is otherwise revenue in nature, but that has been capitalized, or vice versa. So all this can be the potential misstatement. So what auditor need to do? They need to accumulate all this kind of misstatement which are below the materiality level, the SUD posting, what we called the last level of materiality. So those can be leave aside, but rest all other kind of this misstatement need to be parked and accumulate in a separate document, and then sit across with the client. Wherever client and audit team, they are agreeing to a common thing. So get all those misstatement adjusted. Adjusted means corrected by the client. Now what is left out are the unadjusted audit difference. Accumulate all those unadjusted audit difference. Take the net P&L impact, after tax P&L impact, and then see whether it cross your overall materiality or not. if it doesn't cross the overall materiality, that means the net impact of those unadjusted audit difference are not material, and that will not call for a modification in the audit report. But if the net impact is exceeding the overall materiality, so if we talk in an academic sense, yes, then this financial statement are not free from material misstatement, and to that extent, it require a modification in the audit report. Now, consider that it doesn't cross the overall materiality, and you have those five unadjusted audit difference. Prepare a list of those unadjusted misstatement, and those need to be acknowledged by the client, and those, as a standard say, it should be forming part of the management representation letter, where the company will acknowledge that these audit differences are not material and they have not accounted in their books of accounts. And this will form part of MRL and will form part of your concluding documentation as what we call as a SWAD, very common word in the audit terminology, summary of unadjusted audit difference. And if this is done, then one can say that yes, they have given a thought upon what all can be the misstatement and whether those has been crossed the materiality level or not. So this is the essence of this auditing standard. So thank you very much. Now back to moderators, please.
Thank you, sir. Thank you, Nitin, sir. Thank you, Gaurav, sir, for such an insightful session. So there are some questions which participant has asked. Please allow me. Sir, the first question is regarding if fraud is not related to the year under audit, what is to be done?
Tanya, I just missed your voice. I think. Can you just come again? Nitin, have you understood? Are you answering this?
Yeah, the question is if the fraud which has been identified during the course of audit, but that fraud relates to the prior year.
Okay. All right, go ahead.
Yeah.
You want to take it?
So yeah, I will take it. So yeah, since I would say it should not make a difference, even if it's for the prior year, but somewhere that effect is there in the financial statement in terms of the opening retained earning or any of these balance sheet items. Because the example which I gave in terms of there were sales made in the earlier year, okay, which were accounted as sales, but all the entire receivables are sitting even in the subsequent years. And now now in the current year, it is established that those sales which were made in the initial years, they were fictitious. Okay, so that means the receivable itself are fictitious. So, but then it call for the accounting adjustment, and then it call for the fraudulent reporting. So there may be no distinction whether fraud relates to prior year or not, because still it has the impact on the current year financial statement.
Thank you, sir. So the another question is regarding if fraud is after balance sheet date, is it necessary to make provision for fraud in the year under audit?
Now, for this, I would say there is a separate accounting norms where what we called whether transaction which happened subsequent to the year end, whether those are adjusting event or non-adjusting event. So one need to go as per that cycle, whether this will call for an adjustment in the year or not. So again, it's case to case basis.
Okay, sir. Thank you. Sir, another question is case. So it has two parts. So first part is whether auditor is required to report fraud to central government where management has detected the fraud in the first place and the auditor is satisfied with the steps taken by management for prevention of fraud. This is part A.
So let me take it up, Nitin.
Please.
Yeah. Yeah.
So you can tell me part B also, Tanya, then probably we can answer it.
Sure. And the part B is, if in above system, what would be the answer? Whether after the fraud by the management, the auditor in the course of his duties found some other method and modus operandi committed by some same fraudster to commit the fraud.
See, coming back to though I didn't, I think there is some problem because your voice is breaking, but I understood what you're trying to say. See, this is a very obvious question which everyone is asking today. That is, management. If the auditor is not the first person, right, to find the fraud, right, or probably if the management has informed the auditor, is there an auditor's responsibility under 143(12) to report it to the central government still? So, see, if you ask me, the NAFRA has very clearly spelled out on their circular, right, that when they talk about reason to believe, when they say that 143(12), that when the auditor has a reason to believe there is a fraud happened, so they have to report. So they said that there is also an indication of the reason to believe, right, along with that. So if you talk from that perspective, yes, auditor is supposed to report that, right, even if he is not the first person. That's how NAFRA circular has been interpreted, though it has not been very maybe it has not been very rightfully taken up by our community right now, because uh, in that case, I think the reporting is going to be quite significant, right? Because there will be a lot of such aspects which will be there from the management side, which management has uncovered, and still we have to report. So practically, we are not there maybe to support the management in informing the government. There should be some criteria which has to be developed wherein management should report it directly to the government, right? That this is the fraud which we have uncovered or reported. But yes, for now, yes, the management, if even they have told us something or they have found something, we are not the first person to figure it out. We have to do it as per the NAFRA circular. But then, yes, I believe the our institute and other bodies are also making the representations on the same. But at the end, in the court, what happens? We have seen that it has to be seen that what is the essence of this particular thing. So we have to take it, like they say, substance over form, right? So from that perspective, we will have to see what is the objective behind putting this particular section. Is it the objective is to inform the central government through an auditor independently, right? Because an auditor is also performing, because the auditor is reporting to the board and the management. So management knows something and you are reporting back to them the same thing, and then you are reporting to the central government doesn't probably makes much sense. But since it is there in the NAFRA circular, so we will have to abide by it.
Thank you, Gaurav sir. Now I would like to call Tia to take the Q&A session ahead.
Thank you, Tanya. Thank you, Gaurav sir. Thank you, Nitin sir. So, taking forward to the Q&A session, the first question is, how fraud against a house building company can be reported?
How fraud against a house? Sorry, can you just come?
House building company can be reported.
Looks like more of a pain of one of our attendee rather than a question that someone has burned their hands through a house building company and they want to report. See, as an auditor, I think be it a house building company or any kind of a business you are in, the regulations are the same. So if you have to report something as an auditor, you have to follow SA 240. You have to perform the procedures as per 315, 330, and then have to abide by the regulations of 14312. That's what I believe, be it any industry or any segment. Nitin, anything else you want to probably say here?
No, I affirm with your thoughts. So no, I would say industry specific, but yes, if say we are doing audit of real estate company which are into business of developing the residential, so our audit procedure in terms of risk assessment should somewhere factor in this industry specific aspects. So that's how one need to do.
Okay, carry to the next question. Is fraud and forensic audit same? What triggers conducting a forensic audit?
Over to you, Gaurav.
Thanks, Nitin. Yeah, I'll take this one. See, fraud and forensic audit, I think I would not say they are same, right? Because they're two different concepts. We have to understand fraud, where fraud occurs, there the forensic auditor gets triggered, right? Or gets triggered because forensic audit can be done by the on the instructions of the management or the shareholders also, investors also, or the regulatory bodies also. So both way, and the idea is because forensic audit establishes or concludes the fraud. That whether under 447, if an event has occurred, whether we can call it a fraud. Because if it is called a fraud, then there is a prosecution and a lot of other things. So forensic audit, forensic in itself means something which has to probably which has to be gone through a litigation, right? Court of law. So your forensic audit, and honestly, this word forensic is very loosely used by a lot of we have seen in the market also, because when you say you have to get forensic audit done, this means you want a report which is standing to the level that it can be taken to the court. Generally that's not the objective, still they use the word forensic audit. So from that perspective, I think it doesn't match.
Thank you, sir. The last one is one of the way of committing fraud is window dressing. How auditors can stop window dressing?
Nitin, please, your insights.
It's to have the so window dressing again by have some unpredictability, some unannounced audit procedures, uh, that and then how that can be built up by having the entire team discussion and come out with those audit procedure. I would say maybe not nothing is coming in my mind right now as to what can be those specific audit procedures.
No, but pretty much, I think, Nitin, in that case, what I can add on is window dressing is pretty much like you're dressing up your financials only here, right? You're dressing up your financials and you're showing something which is not correct. So window dressing is ultimately nothing but it's a kind of a misstatement only, which you are doing. How material it is or not, that has to be looked into, and accordingly, it has to be acted based on the guidance provided by the standard of auditing.
Right. So in that, probably this testing of journal entries.
Yes.
It, again, if the client or the team is too like I would say clever enough that, so then again, not any specific way of responding to this answer, but question, but through say ratio analysis, through final analytical review, those can be taken care of.
Thank you, sir. There is one question from my side as well that I have faced during the practical scenarios, that auditors got to know that there is something unusual happening in the company. And somehow they have gathered some of the hints from the persons who are not involved in the finance department that there is something unusual going on, or they have visualized that, but they are not able to gather the evidence of the same to present it to the management or to present it to the TCWG. And both the management and the TCWG are disagreeing that, or they are not able to justify that these kinds of things or these have been happening. So at that point of time, what does the auditor do and what are their responsibilities?
To begin with this, many times there is a, I would say, thin wall, or I would say cold war between the finance department and say the sales department, or say between the HR team and the accounts finance team. So it happens in many like companies, and since we sit across with those gentlemen, so we many times we come across those kind of, but we don't know those are either good stories to deliberate upon, but it may not have any reality. So again, have your insights and your business understanding, and so don't get that much bias. At the same time, don't ignore also those kind of interaction. So this is how, like, in the interest of time, I can respond to this.
Thank you so much, sir. Now I would like to carry forward the Q&A session to the Vinay. Vinay, if any other questions, please ask. Please proceed with that.
Thank you, Ria. Thank you, Nitin sir. Thank you, Gaurav sir. So another question is that one of the participants asked that during the audit of an automotive industry, every year in the month end, like in December month, they produce unpunched vehicles due to the change of the year in the March. So they don't do punch chassis number on that. So does we count that as a finished inventory or a work in progress? And how does that mean that auditor should investigate in that, or how do we verify that?
I would say this is out of syllabus question.
This is very industry specific, Vinay. But I think more insights on that part has to be seen, and I think there is no fraud aspect in this particular question.
No, but from reporting point of view also, like, should we consider that them as finished inventory or work in progress? Just that simple question. Like,
so we will take the feedback from the speakers, then we will forward to the concerned member.
Sure.
Okay, sure.
Let's move to the next question, please.
Okay. And so next question is that many times auditors face this dilemma, that conflict, that how do they maintain a balance between maintaining the professional working relationship with the client and also doing a thorough investigation and doing while fraud investigation is going on?
So that I can probably add on that because I've seen both sides. Right now into an advisory role. Earlier was an auditor. So I think it all depends upon what kind of an expectation setting you are doing with the client, right? Because I think independence has to be upmost. It has to be taken up very seriously, and you have to walk the talk, right? It is not something like you say that I'm independent or you say that I'm ethical, but at the same time you're not. So I think ethics, you have to talk about it, you have to demonstrate it. Like, I'll give you a very small example. I think something very petty probably, but I always have this habit, or maybe I always tell my team also, not to take any kind of a favor from any client, right? Even the lunch boxes you should carry for your own, right? Unless until, I mean, you have some other issue. But why I'm telling you this very small example, Vinay, is because these things count. Client will only approach you when he sees that there is an indication. So if you stop giving those signs to the client, they will never approach you, right? For this kind of an approach. And then you will always have an upper end as a professional, right? And always demonstrate that in your actions. Like, instead of, client may say that don't send me the query memorandum, I will verbally tell you the answer first, but don't email it to me. But as a process, you should always formally document it with the client, take their response in writing, and then put it in your work paper file. Again, I'm saying you the same thing. You have to look at your today's relationship with the client, or you have to probably look at the future where you might be questioned by one of the regulators. And that time, client, be your best of the friend, will not be coming and saving you, right? So from that aspect, I think independence, integrity, and ethics, these three things should be it should be demonstrated.
And just to support on this, many times explain the client what will be his advantage of getting this kind of communication over the email or documented, rather than just explaining your documentation part. So you can see, again, it's an practical insights only. You can say that why you are taking on your own, let it be documented. You don't know when say your department gets changed, your role and responsibility gets changed. So it's always better to get it documented. So if in this way, if you communicate, if the audit team member with the client, so client will understand his position, and maybe then he won't be reluctant in getting the communication over the email.
Okay. Thank you, sir. Now can we move forward to Varsha to take the Q&A session? Varsha?
We have a long Q&A session today, Nitin.
Yes, sir.
I guess this is the last one. I guess.
Yeah.
Yes.
Unless Anilji wants to pass on some question to. Yes, Varsha.
Yeah, thank you so much, Vinay, and thank you so much, sir. The first question I have is, if there is any specific kind of fraud that you come across in day to day, and that is to be reported.
Is this a question or is there something?
Yeah, this is the question, that if there is any specific kind of report that you face in practical life and that also needs to be reported.
I didn't understand the question honestly, Varsha, but if you're saying that if there is a fraud that has to be reported, yes, and that's what this session was about, that what kind of a fraud has to be reported, how it has to be reported. And if you're talking the way that it has to be reported, that's already defined, right? There is a complete rule which I read, Rule 14 in the company's Rule 2014, that how this has to be done. But yes, you can't call a day-to-day action because you have to first categorize under a fraud. That's where I started this session from, that what comes under the definition of fraud, right? Maybe someone did not treat you well in the office. You cannot call it a fraud, right? It has to be an intentional act to deceive, right? And it has to be performed where the management or the employees of the companies are involved. So all that parameters have to be met. If that is all there, then definitely, and if the quantum is met, 1 crore criteria individually for a fraud, then you will have to report under 143.12.
So can I reframe the question?
No, Varsha, let me intervene. I guess the question what is being put is that in our professional capacity, have we come across any instance where, say, reporting to central government in terms of 143.12 has been made by us, like as a firm? So I would say may not be right way to respond, because so we can share our experience, but we may not. It would be unfair on us to say that yes, I have reported 2 cases, I have reported 3 cases. So not in that way, but yes, one can understand what will be the reporting responsibility, which Gaurav has rightly explained.
Yeah, actually, I want to ask that if there is any specific kind of fraud that you came across frequently, like in the practical work, the fraud which came across to you, like frequently.
Yeah. So
Specific kind of.
So those are more of in term of fraudulent financial reporting, like overstatement of revenue, in term of the, especially in the last quarter of the year, where to meet the sales target or the incentive by the sale person. So a lot of sales are being pushed in the last quarter, and in the subsequent year, those are being reversed in term of sales return, or say heavy discounts or rebates are being given to the customers. So those kind of instances more on fraudulent financial reporting in terms of revenue overstatement, and similarly in terms of overstatement of expense also, where the promoters or the management's intent is not to minimize the tax burden, so to have more like expenses book which are otherwise not occurred, those transactions. So those are the, I would say, the general types of fraud which one can find out in the audit.
Okay, so the another question I have.
Does it help in whoever asked this question?
Yes, sir.
Okay, thank you.
So then another question I have is, what audit procedure do you perform to catch fraud?
Now, now this specific thing, like take the same example. So through our way, like through the variance analysis and analytical procedure, we found out that there is a very high increase in sale in the last month of the year. Okay, and more especially towards the last 10 days. Okay, so in term of in my testing of like the substantive testing, okay, or as a part of cutoff procedure, will select all those transaction which happened, which got recorded in those last 10 days, and vouch those transactions with the underlying evidence, which will give a comfort that yes, those transactions occurred, because the risk is getting the fictitious revenue transaction being accounted. So that will be through this testing of the lorry receipt or like the transportation. Uh, so in that way, and then particularly when those collection were made against those sales subsequent in the month of April or May. So
Evidence.
yeah, so that's how one can take the complete chain, like right from initiation of that transaction till the realization
Okay.
in terms of those revenue transaction at the year.
Like a complete transaction from the
We are
first to
running
the
out of time. Let us
Yes,
just move a little bit quick.
sure.
yeah. So the last question I have is, how do you ensure existence of ghost employees? Employees have been addressed and a reasonable assurance has been obtained regarding the non-existence of those ghost employees.
See, this is a very particular procedure, Varsha, which one has to perform with respect to the looking at your. See, first you have to understand from the financial statement perspective which line item are you targeting on, right? That's basically your HR cost, right? Which you are particularly targeting on. That's what is having an overall impact, or maybe your compliance perspective. So from that side, first you have to identify that what is the materiality. Then you have to further perform some procedures. So what we generally do is that we try to map their. We take the login of the what do you say their PF, and we go on the portal and check the list of the employees, because mostly when there are ghost employees, they don't create their PF registration numbers. Then we perform a KYC check also on the system. But before that, we look at the process that company is following. That what is their process with respect to creation of any employee. Maybe if changing a bank account is there, what kind of a control is there? Who's having the user access for that? Who's having the access with respect to removing an employee from the system? Now, these are all questions which are answered once you do a process walkthrough, right? And then you understand that what exactly could go wrong, right? Ghost employees is a is a very is a very heavy term. Now you will have to further go deep that what can actually company do in order to create that kind of a term, what you said, ghost employee. So I think these are some of the aspects. Maybe Nitin, if you would like to add any other audit procedure from that.
In one way, like to supplement this, so all those employees, they are required to fill their timesheets to log in the in time, out time. So one can get that exception report where are there any employees who have not filled that timesheet, who have not logged into the system over the period, and then so through that they can move forward and do more specific like procedures, whether those were on leave or what's the reason of that they have not logged into their
Their
time.
HRMS and fill up their timesheets. That's a fair.
That's way, and then get maybe personal information, like, but if client is sharing their say PAN numbers or their bank account numbers, they can not say forwarding to you as a team member, but at least putting on their screen that these are the underlying the PAN numbers or bank account numbers in terms of their master file of their employees. So from there one can make out the gaps.
Okay. Okay, sir. That's all from my side for today. Thank you so much. Thank you so much, Nitin sir. Thank you so much, Gaurav sir.
Thank you so much, sir, for your wonderful deliberation. Nitin sir, Gaurav sir, this is the first webinar where we have spent almost 2.5 hours in place of 2 hours, and you have spoken for at a stretch 2.5 hours, and all the moderators are here. And we were supposed to wind up by 8, but now it's 8:30. So I'm still having 5 questions, but I am not raising those 5 questions. It's already 8:30. So once again, on behalf of WSB of ICI, I extend my heartiest thanks towards both these speakers for the wonderful deliberation and wonderful coordination while the deliberation. So you have covered all the aspects relating to the fraud detection and relating to the auditor's responsibility. So thank you so much. You have covered almost more than 15 questions also, and still we are having so many questions. I'll forward those questions to you, and whatever will be the response, I'll forward to the concerned member. So thank you so much once again. I also thanks all the participants of today's webinar, and I also thanks all the four moderators for coordinating this webinar in a very successful manner, in a very coordinated manner. Madam Riya Uglani ji, Vinay Jain ji, Varsha Madam, Tanya Agarwal ji, thank you so much on behalf of AASB for sparing your valuable time and moderating this webinar. Thank you so much. Thank you. Namaste.
Thank you.
Thank you, everyone.
Thank you.
Take
Thank
care.
you.
Bye.
Thank you.
Thank you. Thank you.
Thank you. Thank you.